Hey, welcome back. It's May 23rd. I'm on one of my walking videos today, and there's been a dip in Bitcoin price, and also the markets has started out on the day's trading on the red. I'm going to give my take as to what has caused the dip and what we could expect moving from here. Now, there's two reasons why the market's fundamentally found itself on the red, and unfortunately it's to do with this continuing debacle on the tariff war imposed by Trump and his administration team. The first announcement he's made just recently, I think it was today, that he's going to impose a flat fee 50% tariff on the European Union, which will kick in on June 1st. Now, interestingly, the UK has been the only European country to reach the favourable deal. So that's reason number one. Reason number two, which I can't quite understand, he's actually imposed a 25%, or is going to be imposing 25% tariff on Apple for any iPhones that are not produced in the United States. So this is actually worse, in my view, versus the first announcement that he's hitting one of his own American companies. Apple, being an American company, is going to suffer the most. It just doesn't make sense at all. I think we can all agree this tariff business is not going to benefit anyone in the medium long run, and the first cohort that's going to suffer the most is going to be the US electorate, the US citizens, the US consumers. Right? I understand that the tariffs are only meant to be used as a negotiating arm, but that is not the right approach to come about reaching more favorable, positive trading deals for the US. There's other ways to achieve that. But what he's doing is trying to insulate the US further away from the rest of the world, which, as we all know, as history has shown, that is not a win-win situation for anyone. So that is the two reasons why we are seeing the markets on the red. And moving back onto Bitcoin, there's two reasons why there's been a dip. The first of which is to do with this $3.3 billion whitewash or wipeout in the options market. Now, if we recall, the options market is like a derivative market on the original Bitcoin spot ETF shares. So fundamentally, it's BlackRock, which is pretty much, I believe, it's the only the only ETF share that's been approved by the US regulator to be able to offer these options derivatives on the BlackRock IBIT options market. There's $3.3 billion of options due to expire today. So obviously that has required to, clear out any leveraged positions that might have been opened up until today. And by doing that, obviously that has had a negative repercussion effect on the price of Bitcoin. I think we've lost $3,000, which used to be under $11,000 a few days ago. Now it's hovering around $108,000, $109,000, which is not a great deal. But then again, that is one of the reasons. The second reason is to do with the actual liquidity, the actual clearing out of the liquidity, particularly on the long-term holders, that have actually decided to cash in. So there's a kind of clearing out of those long positions. And what we are seeing, or expected to see, is once that's happened, that's actually cleared out, we're going to see liquidations for the shorts, on the shorts themselves. So this is really for the short-term traders who like to attempt to use Bitcoin to reach kind of an interesting capital gains, or interesting gains, if you like, as a result of this options derivative market, which I've always advocated against. It's not something that the ordinary layman person investor is able to do. It's something really targeted for those professional traders, day traders. And even then, I don't think I've ever come across any professional trade data that has actually made or raked in millions upon millions of dollars. There may be one or two out there, but 99.99% have failed, which is all the more reason why I've advocated against betting on Bitcoin or trying to day trade on Bitcoin. You leave that for the dinky old equity stocks out there, but not in the case of Bitcoin. Is that store of value asset that is meant to preserve our capital and even grow it in the long run. So if you kind of zoom out, and what's happened today is these kind of dips should be treated as gifts, right? So buying the dip should be treated as gifts. Those moments, those golden moments to be able to stack on the Bitcoin stash that we have and to continue to DCA and to hodl on any Bitcoin that we've accumulated during the days and weeks ahead of us. So hopefully you found this video inspiring, and really the message is quite clear. If you're able to add to your Bitcoin positions, I encourage you to do so, but hold it on to the long term. So if you enjoyed today's episode, please hit the like button, to share the video to colleagues and friends, and if you haven't done so, to please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology and the future of finance. So I'll see you on the next one.